Welcome to TradeTheMBI.com. This is a tutorial on the ABM. ABM stands for the Advanced Baseline Modifier. What it is, these squiggly lines that you're seeing right here that seem to be randomly moving around in price, not so random. They're designed as a stop for entries as well as for short entries, and designed to adjust according to both price as well as the algorithm readings from this indicator you see down here called the DOC, or the D omega converted. And in essence, what happens is when a buy signal is achieved, it will reset to a point that sets a stop, which is 2.5 times the ATR, which is the average true range of a typical standard 14-period ATR. And from that point, gives a brief period and expects price to make a significant movement and adjusts accordingly, and we can then utilize that as a more effective means of stop, or just a guiding trailing stop, if you will. Further, we can make some adjustments with this ABM. As it is now, you have both the red line that's above on the top for shorts and the multiple colored lines that are below. If we take a look at a different chart here, we can kind of see what will happen if we just decide to right click and format. And if we do that, we format it and we go into our input section, and under the input of true or false, for the lines always on, if you were to convert to true, they would all be on all the time. False just means that you would have them for the long side underneath and for the short side up above, and that's simply how it's converted. But you can see here, upon a signal arriving, resets to the low value, and then shortly thereafter climbs in relation to the expectation from the indicator going forward. Now, one of the features I always like is if you remove price from the equation, you should still be able to tell what is happening with price, irrespective of what's going on with the actual price readings, just by following the ABM. You can see these would all be long setups and your brief short setups inside of it. Flipping back to the regular screen with the full setup, we can see here that within the red trend, and the red trend ironically is also tied to the ABM and the DOC originally, we ended up with a buy signal here from the ES daily, as you can see here, that developed at the close of the 1732 bar. And you can see that from the upside portion, the short stop that was already in would be referred to as the magenta stop, the little red line down at the bottom, and it resets to this value down here, trails across for a couple periods, and then the fast acting portion of it is the yellow line. And typically the yellow line is used as the quick response, in that it will compound itself very quickly to the most current reading and accelerate based on not just price movement, but also on the acceleration spread between the DOC readings. And as it gets up to a point where price begins to either plateau, or the readings, in this particular case you can see they've started to turn to a sideways action, it becomes effective because we typically like to utilize it early on when you're in the initial stages of it. But as soon as price moves to what we would consider a sell signal, which would most likely be right where you start to get the magenta develop, which is also corresponding to the red dipping below the white in this case, doesn't automatically create a sell signal in this particular configuration. And what it does is it causes us to change our risk profile and say, okay, fine, I need to utilize different level of the ABM. For buy signals that are continuing, the green is more than adequate to just trail gently in case there's some catastrophic move. It's significantly far enough away from price that it isn't really of an impact. I like to tell members that usually upon the breakout from the range and your yellow ABM reaching your break even, you're safe to set that and then begin to trail using the green, as long as you're in a configuration where you're either having rising red and white from your DOC readings down here, and you can then pick and choose based on your risk tolerance which stop you prefer. At the point where you have breaches of the yellow, you may want to move up your um, color selection to the various ranges, and these are all typical of the algorithms, and they're not just based on any kind of Fibonacci retrace or anything like that. No correlation to that or pivot points of any kind. They're literally subject to, as the algorithms are generating additional either press or cell signals, will adapt to what is taking place. And this is why you'll get sometimes a convergence and sometimes a separation, and they will vary as they begin to rise through that. Now, within the short configuration of it, if you're still in green trend, which it will remain in green trend, particularly using this paint bar, until you've broken below the yellow support line, in which case then it will turn to red trend. Um, your failsafe becomes typically this last green, and usually when that green is violated with a close below, it's usually when you begin your further cascade to lower setup. And a little bit different when we take a look at, and this is from a daily standpoint of the ES. We're going to take a look at an intraday chart. This happens to be a 5K. You'll see some things that are just a little bit different with it. Interesting aspects, because here's what happens in this unique 1-2 setup that I've indicated right here. Yellow candle for buy comes in, and you can see the ABM resets off of what was, a short configuration right there. And when it does this, it places the stop pretty much right down here along this white line 1802 range. And immediately upon this entry, which turns out to not do so well initially. In fact, didn't even turn green, because even within a red trend, when you get a yellow candle, if you are a short side trader, it will reset to a little bit higher stop value off of that, because the anticipation is from that yellow candle, you're likely to get a little bit of a burst before you have your continuation. And so that's where it rises accordingly. But it doesn't reset in the number 2 category, because as far as it's concerned, the number 1 that came in, the stop wasn't violated from its baseline, which is down here at the white line where it originally came across. If that had been violated, then a new yellow candle would have reset the ABM. The fact that it didn't reset the ABM considered that it was still part of this long setup, which in fact was accurate. And it continued to make its move finally from there. And you can see then also that the shortstop did lower and stayed pretty much flat along the upper magenta line, which we can read right there was at 1806.67 as it scrolled across right through there. Literally this 1803 was the close, because it broke down again below the green. And I often will tell people that utilizing the ABM for these breakdowns becomes an excellent opportunity, whereas if you were short, to follow some of these and use it as a cover point where it breaks back above, or an opportunity to go long, and then you can follow. And sometimes you'll get chopped where it'll go across and do that, but invariably utilizing these as those kinds of pivot points becomes extraordinarily effective. And you can see here, as price moved along, you ended up with what was still buy signals going in through here until you reached this point where you were still within a buy. It did not cross over, even though you had the breach of the yellow line. This is where the green becomes effective. But when you actually do have a sell crossover, then it becomes a little bit more significant to capture those gains by utilizing your yellow line and just waiting for a move back to the upside of it. Even if you wanted to wait on that, as I've talked about to members, these pivots of the green back to the upside become very profitable to maintain. Now, from a short standpoint, becomes very interesting. Within an overall short setup that begins here, I could have changed the color to red and left a stop above as just a straight line until it was breached at that particular point. But we have a lot of people who are more active with their trading back and forth, so I allow for very quick response ones, and when the readings don't support the continuation, the trail off is very fast. So yes, short signal trails out very fast and moves above it very quickly. And that will give a lot of these indication signals. So the reality is you're going to have to decide which direction you want to be trading. We know the violations of the various ABM levels give you your short, but there you end up with your stop, and you can see how quickly the stop moves lower in order to lock in the gains rather quickly. And so it becomes quite effective from looking at it from that standpoint, particularly if you are in a significant downtrend, as we showed before, and you get a yellow um, bar. It isn't essentially a buy to cover. It's merely going to reset a stop for you directly above and begin to trail lower with the expectation that most traders might refer to it as a dead cat bounce. And you can see coming across here where the magenta pops in wasn't what we would really define as a clear sell signal, um, but coming across did have a few little dips, but needless to say, the line continued to cross. No reset, because in order for the ABM, in this particular case, to reset, you're going to have a buy crossover that includes the green moving above the red and the white, and then also uh, the red and the white moving above in order to get a yellow on the shorter time frames. On the daily, a little bit different. It allows a little bit more flexibility because of what it takes to get a daily signal versus an intraday. And you can see from the daily signal, didn't have the red crossing the white till all the way over here. Needless to say, though, it already gave the signal on the immediate green crossing of the red on a daily configuration. And we can just randomly click the chart here and scroll back in time and just get a random period. Boom, hadn't even looked at it before. You can see right here, yellow came through, maintained itself. Boom, secondary one from the yellow daily right there, resets. Even though it didn't break below this point, came right to it. So it signified that, created a new stop, and then let it run from a daily standpoint, and didn't breach until right up here, and that was within cell configuration, but it turned around immediately and moved right back above it. So you can see how effective utilizing that exit there, and you just put in a new buy stop for a turnaround in case it happens, and you can follow breakdowns and breakups quite effectively. Here in 2014, it's been mostly one directional, but that's okay. Times change, and effective to have something that will give you that. Now, as the algorithms are updated and changed, you will find changes in where the stop setups alter themselves and give us better clues as to more prime short opportunities. But this gives you a general concept of what the ABM does and how it works. We'll get into some more detail in future tutorials on how best to utilize it from the value standpoint, and or even utilizing it to capture gains on what you expect to see a little bit lower move even after a buy signal. Particularly buy signals that come in our death zone. For those that aren't familiar with that, please refer to the DOC tutorials, because that will explain it. This is that range between the -7 and -13 where buy comes in, and you can utilize your ABM to capture moves where you expect the low to be taken out and get yourself in at more optimal values. As always, continue to look for additional updates on YouTube and or the website. Trade well.